and gentlemen, good day and welcome to the Dhanuka Agritech Q2 FY2024 conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking. Thank you and over to you, sir.
Thank you, Rohit. On behalf of Antique Stock Broking, I would like to welcome all the participants on the Q2 FY24 earnings call of Dhanuka Agritech. From the management, we have Mr. M.K. Dhanuka, Vice Chairman and Managing Director, Mr. Rahul Dhanuka, Joint Managing Director, Mr. Harsh Dhanuka, Executive Director, Alliances and Supply Chain, and Mr. V.K. Bansal, CFO on the call. Without further ado, I would like to hand over the call to Mr. M.K. Dhanuka for opening remark, post which we will open the floor for Q&A. Thank you and over to you, Mr. Dhanuka.
Thank you, Manishji. Good afternoon, ladies and gentlemen. Myself, M.K. Dhanuka, Vice Chairman and Managing Director of Dhanuka Agritech Limited. I hope all of you are doing well. Thank you for joining us in this conference call for results of Q2 FY2023-24 of Dhanuka Agritech Limited. I have with me Mr. Rahul Dhanuka, Joint Managing Director, Mr. Harsh Dhanuka, Executive Director, and Mr. V.K. Bansal, CFO. As you know, Dhanuka Agritech is a leading agrochemical company in India, focusing on branded sales in the market. The company's strength lies in manufacturing and marketing of formulated products. The product portfolio is spread across insecticides, herbicides, fungicides, and plant growth promoters. Dhanuka Agritech is working with the vision of transforming India through agriculture. Our belief is that when we transform the farmers by enhancing their productivity and quality and in turn enhancing their income, we are making a small contribution to transforming India. We work in all major crops in India and have implemented the best-in-class technology to ensure a smooth and efficient supply chain. Dhanuka have a pan-India presence through its marketing team and warehouses in all major states across India. With 4 manufacturing units and 41 warehouses across India, Dhanuka cater to around 6,500 distributors and dealers and around 80,000 retailers. Through this extensive network, Dhanuka reaches out to approximately 10 million Indian farmers with its products and services. Dhanuka has more than 1,000 techno-commercial staff supported by a strong sales and marketing team to promote and develop new products. Dhanuka's strong R&D division has world-class NABL-accredited laboratory as well as an excellent team for new product registration and development. Dhanuka has international collaboration with 10 leading global agrochemical companies from the US, Japan and Europe, which helps us to introduce the latest technology in India. As per a recent report of CRISIL rating, agrochemical makers will see a 3% drop in revenue in FY23-24 for the first time in a decade due to falling prices globally, muted demand for exports owing to destocking by global manufacturers, and the impact of lower reservoirs levels on Rabi sowing, especially in southern and western part of India. However, I am happy to share that Dhanuka has shown good growth during the last quarter in spite of the above challenges. We maintain a constant focus in reaching to our customers and understanding their requirements dynamically. Accordingly, we are able to change our plans quickly with our flexible supply chain system. Further excellent demand for our product Decide, introduced in last year, as well as some powerful product introduction in the current financial year supported the revenue growth. Our insecticides portfolio has grown substantially due to these introductions and contributed to the growth in Q2. Dhanuka have also commenced operations at its new chemical plant in Dahej and started production of bifenthrin technical with effect from 8th August 2023, which was 43rd Founders Day of Dhanuka. Coming to the financial performance for Q2 of FY2023-24, revenues from operations stood at rupees 617.92 crores in Q2 of FY23-24 against rupees 542.9 crores in Q2 FY22-23, having a growth of 13.82%. EBITDA stood at 141.58 crores in Q2 FY23-24 against rupees 97.52 crores in Q2 of FY22-23, having a growth of 45%. Profit after tax was at rupees 101.77 crores in Q2 FY23-24 versus rupees 73.02 crores in Q2 FY22-23, having a growth of 39.37%. Considering all the constraints, I would like to place on record my appreciation for the total Dhanuka team who has been able to deliver such good results. The zone-wise percentage share of turnover for Q2 FY23-24 is as under: North 24%, East 11%, West 34%, and South 31%. Product category-wise share of turnover for Q2 of FY23-24 is insecticides 44%, the highest share in this category. Fungicides 18%, herbicides 25%, and others including PGR. During this quarter, the company has launched two products. First is Tizom. Tizom is a 9(3) product for sugarcane crop that has effective control over sedges, broadleaf and narrowleaf weeds. Tizom is launched in collaboration with Nissan Chemical, Japan. The second product is Semecia. Semecia is a co-marketing product, a broad-spectrum insecticide with excellent efficacy against Lepidopteran insect pests on a range of crops. I would like to inform that Dhanuka Agri Solutions Private Limited, a company's wholly owned subsidiary, which was incorporated in Bangladesh, has been liquidated with effect from 10th August 2023. This company was incorporated in the year 2011. However, it was not in operation since its inception. Further, the board in its today's meeting has also approved the dissolution, sale, transfer of Dhanuka Chemicals Private Limited, a company's wholly owned subsidiary incorporated for undertaking the Dahej projects of the company. The Dahej plant operations started in Dhanuka Agritech Limited itself. Therefore, there is no requirement to continue with this company. I would like to inform you that Mr. Mridul Dhanuka has tendered his resignation from the office of non-executive director of the company with effect from the close of business hours of November 7, 2023, stating the reason that due to his preoccupation in Orchid Pharma Limited, he is unable to give the time for the company. The board placed on record its appreciation for the invaluable contribution made by Mr. Mridul Dhanuka during his tenure as Executive Director and Non-Executive Director of the company and accepted his resignation. I would like to inform you that the board has approved the appointment of Mr. Manish Dhanuka as Additional Director under the category of Non-Executive Director and further recommended to the members for their approval for his appointment as Zone Executive Director, who will be liable to retire by rotation. Mr. Manish Dhanuka has wide-ranging experience in handling operations, marketing, and finance in the manufacturing industry. He excels in creating economical pharmaceutical technologies and accelerated evaluation processes for improving healthcare. He has experience of 25 years in the pharmaceutical industry and has expertise in chemical synthesis. He holds BTech in Chemical Engineering from IIT New Delhi and MS in Chemical Engineering from the University of Akron, USA. He is on the board of Dhanuka Laboratories Limited, Orchid Pharma Limited, Orchid Biopharma Limited, Otsuka Chemical India Private Limited, and Messrs Synmedic Private Limited. Dhanuka considers itself responsible towards securing the farmers' welfare and preserving food security of the nation. We continue to strengthen our association with the Farmer Producer Organization, Krishi Vigyan Kendras, and other critical institutions to increase our business expertise and boost our market presence. Thank you very much for your kind attention. We would now like to open the forum to take the questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Himanshu Upadhyay from O3 PMS. Please go ahead.
Yeah, hi. Good afternoon, and congratulations on a very good set of numbers and performance. My first question was, we are hearing from many agrochemical companies that who are into more backward integrated, okay, that the prices of their products have fallen far below the cost of production also in certain categories, okay. What type of opportunities as a formulator does that bring for us? Because, can we benefit over the intermediate term by having a inventory build-up of certain goods where the price of commodities have fallen quite significantly, what we understand from other peers? And do you think this situation to continue for pretty long period of time?
Thanks for your query. Your question is not clear both in terms of audio and in terms of the question itself. So
okay.
Probably the audio itself is playing, so could you make it better?
Am I audible now?
Yes.
Yeah, so my question was, what we are hearing that the agrochemical prices have fallen quite significantly, okay? And some of the companies have stated that the cost of production means the fall has been such that the price of commodity or agrochemical is below the cost of production. What type of opportunities does that bring for us, okay? And do we think that we can hold on to larger inventory because the prices are so low? Or you think this situation will continue for quite some period of time and hence it does not make any sense in buying inventory or building inventory? Some of your thoughts on this.
The situation has continued now for almost 9 months, that the prices are optimizing month on month. Almost for all the products, they have optimized over last 9 months. And the uncertainty continues for a while. So it's a tricky balance as to which products inventory to keep in anticipation of good sales and which product inventory not to keep in anticipation of further reduction. So it's a tricky balance, and we are doing that tightrope walk already. So So there is no straight situation as to should we keep high inventory or not. We choose it product by product. Dhanuka has a huge range of more than 90 brands, and we reach out to the farmer with comprehensive solutions, and we reach out to the farmer based on the seasonality and change in crop portfolio. We modify our inventory holding accordingly.
But you don't think because of significant fall in commodity prices, we can hold on to or higher inventory in the top 10 products what we sell?
No, I don't think so. I can say that with a certainty, because the price correction is still happening. The inventory that I will hold for top 10 products will not correct in next month is not guaranteed.
Okay. And are we seeing the prices of the finished goods also fall in the domestic market, or you are saying that because of being more branded, we are able to maintain our prices on majority of our portfolio?
We have to pass on the benefits to the farmer in a market which is optimizing at the back end, and Dhanuka follows a dynamic pricing mechanism, and we try to offer the best value to the farmer. So we do correct the prices every month, sometimes increase, sometimes decrease.
In the first 6 months, how much would be the volume increase and value increase?
May we request you to return to the question queue for the follow-up?
Last question, follow-up.
I'm sure our other audience will be interested in this response specifically. So the volume increase is close to 10%, more than 10%, and the value increase is already there, is about 5.5%.
Okay, thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Darshita from Antique Stock Broking. Please go ahead.
Yeah, thank you for the opportunity. So, just one clarification. The volume growth of 10%, was it for first half or was it for 2Q?
It is for first half. In Q2, the volume growth was around 20%.
Okay, got it. And have we taken any price hikes on sequential basis?
Could you repeat?
Have we taken any price hikes on sequential basis on overall portfolio? Have we taken any price hikes?
We have modified our prices month on month as and when required. Sometimes there is price hike also.
Okay. Could you quantify, I mean, if it's possible, on overall portfolio basis, what kind of price hikes or price corrections we have taken on sequential basis?
There may not be a standard response to that, but if you could, kind of compare the two, that the volume increase is more than 10%, and the value increase is 5.5%. So actually there is a delta where the overall portfolio price would have gone down.
Okay, got it.
Product by product there has been price increase, but overall, if we look at, over 6 months, prices have actually gone down.
Got it. My second question was regarding the gross margin expansion. If you could help us out with the reason behind what has led to the strong gross margin expansion.
Yeah, you see, expansion in the gross margin is due to 2 things. One is the product mix. So in Q2, our entire growth is coming from the lifeline portfolio. In generic, just like flat. And secondly, last year there was a huge loss on account of the carryover inventory, which is now there in that particular year. So because of which, we could be able to deliver very good gross margin in Q2.
Got it. Could you quantify the gross margin expansion between these two? How much was because of product mix and how much was because of, the phasing out impact of high cost inventory?
You see, the impact of the product mix is large on account of you can say 2/3 is because of the product mix and 1/3 because of the high inventory cost in the previous year. which is not there in that case.
All right. And just one last question on the product side. What we hear and what we have gathered from our channel checks is that insecticides and fungicides as a portfolio has not done very well during Kharif. So if you could provide us some idea as to how did Decide do so well, firstly, especially for the second quarter, and the market size and the market opportunity that we are seeing for this particular product.
Decide is a very versatile insecticide coming from Mitsui Chemicals of Japan to Dhanuka. And this is a 9(3) registration product. And this is done extremely well because of its huge opportunity on the major targeted crop chili. So chili has a major opportunity in the country, especially this year because of the chili commodity prices also being very high. Other than chili, Decide has been accepted by farmers in various other crops also, which get impacted by sucking pests like whitefly, green jacid, mites and thrips. And Decide performance is superlative across various crops. And we are going in for label expansion on many other crops based on farmer experience. So it's a favorite product across all geographies.
And an approximate opportunity size, if you could help us out with some numbers.
Well, cotton itself is 12 million hectares, and chili would be less than half of that, and almost all horticulture crops like brinjal, okra, tomato. So everything put together, the sucking pest opportunity is really huge.
Got it. Thank you so much for the opportunity and congratulations on good set.
Thank you. The next question is from the line of Resham Jain from DSP Asset Managers. Please go ahead.
Hi, good evening team. So first of all, congratulations on good set of numbers. So I have two questions. So first one is with respect to the new Dahej plant, and it got commissioned during 2Q. So I presume that this quarter number would have some element of that, and obviously initial period there would be some losses into that. So would you be able to quantify what was that number, startup cost, if it would have been a part of your P&L?
Yeah, you see the Dahej plant was capitalized on 8th of August because production was started 8th of August. So in terms of revenue, no revenue in the Q2. In terms of cost, basically is around 5-6 crore, which is part of this cost.
Okay, so which means the margin which we are seeing actually would have been even better than on a like-to-like basis, because last year.
Exactly.
Okay. And also the second one is, if you can just give an update on, you mentioned that you have started with first product, but let's say going forward, what kind of visibility you are having beyond bifenthrin which you are manufacturing, and any update on new contracts from innovator companies?
Right. So with respect to first part, new products, so we are working in our R&D to develop more products. And when the products get developed in the R&D, we'll evaluate them for introduction. That is first. And with respect to the contracts from the multinational companies, we have initiated some visits from some of our partners and talking to them about the opportunity for manufacturing in Dahej. But as of now, no opportunity is in hand.
Okay. But any so beyond this current one product, are you planning any other product into this in the same plant, or how are you thinking about it?
Yeah, in the current plant, we can manufacture up to 4 to 5 products because it is a multi-purpose plant. And parallelly, we can manufacture 2 different products. So next financial year, definitely we'll be adding more products in this plant itself.
Okay, understood. Thank you.
Thank you. The next question is from the line of Hussein from Carnelian Capital. Please go ahead.
Hello. Hello.
Yeah. Hello.
Hello.
Hello. Am I audible?
Hello.
Yes.
Am I audible, sir?
Yes.
Yes. I just wanted to understand from you, sir, on the current quarter, what is the mix that we see in terms of the growth? And first of all, I think the new molecules have contributed big time in terms of the sales growth in the first half. But how do you see that panning out in the second half? And how is the base business doing? And so that was the first question, sir.
Right. So our new products, which are Implode, Mesotrax, Decide, Defend, all these products have huge opportunity, especially the two maize herbicides that we have launched, Mesotrax and Implode. So Rabi maize is a good opportunity going forward. South is going to have a upcoming chili season, which will be spanning through entire November to February. That chili would also have a good opportunity for us. BPH opportunity is ahead of us for our product Defend in the month of November for sure, and then probably again in March. So these opportunities are certainly going to be very powerful. Senecia, which is our recent introduction with help of Syngenta, is going to find opportunity in almost all horticulture crops. And Tizom, the sugarcane herbicide, will also find space in Feb-March North India sugarcane business. So overall, we see next 5 months very promising for all our new offerings.
Okay. And sir, I just wanted to understand on the CDMO part. So any talks with some of the key clients that you have? Any update on that front that you would like to share with us?
Right. So we are having very intense discussions with our partners, and there is a huge opportunity that we see going forward, and we'll be very happy to come to developments in this forum at the right time.
Okay, got it, sir. Got it. Thank you. That was the only question. Thank you.
Thank you. The next question is from the line of Viraj from SIMPL. Please go ahead.
Thanks for the opportunity and congratulations on good set of numbers. Just 3 specific questions. First is on the sales part. So if you just specifically on the volume side, if you could just give some perspective in terms of the growth for us at the end consumption level or the retail level, vis-a-vis the placement. And do you see any risk of sales return in H2 given the way the monsoons has played in first half and still some uncertainty in the Rabi so far? So that is one.
So you are talking about the risk of sales return, right?
Yeah, and generally how is the growth has been at the retail level for our products in H1, especially Q2?
So the growth has been good. Volume growth in Q2 has been 20%. And we try to keep our channel clean. So whatever is the goods return opportunity, we try to do that on an ongoing basis. And we do it kind of season to season. We do not leave our channel stuck with unsold inventories. So our Dhanuka channel is almost clean with unsold stocks. What we have right now is the stocks which are going to be consumed in the month of November. So the risk of goods return is not there, and that's why we are pretty confident that we'll be ending the year on a similar note.
Okay. Second question is on the mix part, especially the one which you talked about in terms of the gross margin improvement. Now, if you look at the new product share in the Q1, it was somewhere around 20%. And if you look at H1, we talked about 16%. So, when we say the new product which are traditionally more high margin, especially at the gross level, sequentially that seems to be, at the lower end, revenue contribution. still we have seen a very healthy jump in the gross margin. So is it largely due to the inventory gain or the raw material other than the product mix? If you just kind of give more elaborate color on the product mix part, what is driving this gross margin improvement?
So the gross margin is driven by our proactive shift on the products which were required in the stress situation. So we kind of drove our marketing campaigns around selected products to drive the stress, to take care of the stress condition in the field of the kharif due to low rainfall and high temperatures. That is the shift we made, and those products were accepted well by the farmer as compared to weedicides or fungicides which were not being consumed. And of course, our new products like Defend and Decide, they have held the fort for us.
Okay, and in terms of, say, was there any element of captive consumption from the technical plant, or there was no production basically from August to September?
Yeah, there is captive consumption, but that is as of now too small to be, be of impact.
Okay, and just last question. You talk about Defend, Implode, and even the new product, the Tizom, right? In terms of the opportunity which you see, in say over next 1 or 2 years or 3 years. So if I have to just kind of, put an analogy in terms of say our earlier top products, say Sempra or Targa Super, these over a period have turned out to be, more than 50 or 100 crore kind of a brand for us. So when we now talk about these products, what kind of a similarity or you see between these products and the one which we, the top products which we had. So, if you can just kind of talk about what you're exactly looking at in terms of which gives you that confidence that this has a potential to be a much more larger brand products for us.
See, if history was any evidence, then the way Defend has moved in Kharif and the way Decide has moved in Kharif gives me confidence of how they will perform going forward. Defend is a Corteva novel chemistry. It is an insect growth regulator. It controls dreaded, dangerous BPH of paddy rice across the country. So with 42 million hectares of rice and BPH being a very resistant pest, this is the best solution farmer has today. So Defend opportunity is ahead of us in East and in South India for the month of October and November, and again in February, March. Decide, a sucking pest product, has a good opportunity in chili and various other horticulture crops and sucking pests in all the opportunities. Now, these two products themselves are pretty powerful. Mesotrax and Implode, our introductions are maize herbicides. Maize is becoming a huge commercial crop across the country with acreages touching cotton acreages. So that again, and the maize farmer is becoming pretty progressive in use of herbicides like no other crop. So we are pretty hopeful of Decide crossing all imaginable levels in times to come, and then various other products trying to compete for top 10 position.
So we would have still another 3-4 years before these. Yeah, just one last query on this. For all these 3-4 products, would we be the exclusive partner, or these would also be co-marketed by other players in the Indian context? So typically the partnership.
For Decide and Tizom, Dhanuka is the exclusive partner. These are our 9(3) registration. Decide from Mitsui Chemicals, Japan, and Tizom from Nissan Chemicals, Japan, and these are our exclusive tie-ups.
Okay, fine. Thank you very much, and I'll come back in queue.
Thank you for your interest.
Thank you so much. The next question is from the line of Rohan Gupta from Nuvama. Please go ahead.
Yeah, hi sir, good evening and thanks for the opportunity. Congrats on a very solid set of numbers. So just few clarifications. We have done capitalization of roughly 170 crore, I think from the commissioning of the Dahej plant, but the depreciation seems to be on a Q-on-Q basis quite high, roughly 5 crore. So that leads to annual annualized depreciation on the new plant of roughly 20 crore. Will that number be right? And what depreciation policy we are adopting?
You see, capitalization 170, yes, absolutely okay. And what is your next question?
So depreciation incrementally on Q seems to be roughly 5 crore. That means annualized depreciation of roughly 20 crore on 170 crore, right?
No, it is not only 170. There was a capitalization last year in Udhampur and certain capitalization in Sanand as well. It's all inclusive.
No, so I'm asking, sir, depreciation for the quarter is roughly 10 crore versus previous quarter Q1 was 4.6 crore. So that is roughly incremental of almost 5.3 crore. Is this a normal number, normal depreciation going forward? Because that depreciation rate seems to be quite high on the capitalized asset.
No, you see, without haze, the depreciation was bound to increase this year in quarter 2 because the last year capitalization in Sanand, Udhampur and Keshwana, right? So on account of the haze, this year would be the incremental is in this quarter 2 is not a significant amount because of the only 2 months depreciation has come.
Okay, I'll clarify this further later. Sir, in terms of the monsoon, definitely we have seen a very solid growth in Q2. With the 20% you mentioned is a volume growth. However, the realization growth still remains negative. I think that given the falling raw material prices, we have seen that October so far now has not been that great for the monsoon, and the Rabi crop outlook has been slightly lackluster. So, how do you see that the second half of the year panning out? That is one. And second, sir, your earlier EBITDA margin guidance, you were talking about roughly 150 to 200 basis points, 150 basis point actually incremental. How that margin stand now after a solid performance in Q2?
So we are looking at a good Rabi with rainfalls, especially in South India, and we are also looking at East India as a good opportunity in the next 5 months or H2, so to say. And we are pretty confident of delivering a similar number by end of the year in terms of top line growth, and EBITDA margin growth of 200 bits is looking sure. Gross margin upgrade of 200 bits is looking sure.
Okay, sir. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Prashant Biyani from Elara Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, decide stocks that we would have placed the consumption would have happened by now, or it will happen in Q3?
All decide which has been invoiced in Q2 is consumed.
Okay. And on the technical side, how much prices of bifenthrin or any other product which we want to start maybe in the next few months, how much price increase should happen in those products to make it profitable at gross level, or it is already profitable because the spreads are maintained?
So bifenthrin is already profitable at gross level, and some of the other products that we want to manufacture, we are looking for a correction of about 10 to 15% in the prices for them to become profitable at gross level.
Right. And for Q3, we are continuing with normal production for the entire quarter. That is what we would have planned for bifenthrin?
Yes, for Q3 we will be achieving our production target for this quarter.
Okay. Thank you. That's it from my side.
Thank you. The next question is from the line of Archit from B&K Securities. Please go ahead.
Hi, sir. Thanks for the opportunity and festive greetings to all of you. Sir, just from picking up from the last Concall, we were looking at close to 50 crores of revenues from bifenthrin and lambda-cyhalothrin, and maybe close to 80 to 100 crores in FY25. Do we still stick to that target?
For FY24, I feel we are behind in the last quarter on our numbers from bifenthrin. So FY24 number, I have my doubt, but FY25, I'm confident of delivering 100 crore revenue from the Dahej plant.
Sure, sir. So just one more question, rather a small confusion that I had. While our receivables in the semi-annual balance sheet have gone up close to 180-190 crores, and we mentioned about sales returns not being a challenge, would it be safe to assume that almost half a quarter down the line, whatever we have placed in the 2Q has been more or less consumed in the current quarter? The receivables must not be a problem going ahead.
Right. So, goods return is happening on the season basis. So I'm not saying goods return is not a problem. We don't like goods return. Yet, at Dhanuka, we keep the channel clean. So if there is unsold stock, we try to turn it around very fast. Right? So that is about goods return. And our receivables are being managed very neatly, I would say, and very micro. So yes, in terms of the proportionate increase in our outstanding is there, but that is very much in control.
Sure, sir. Thanks. So just one last. So there is a 50 crore loan facility that we have created for Dhanuka Laboratories. Could you explain or rather elaborate the terms for what's been given for and anything on that front, sir? Thanks a lot.
Dhanuka Lab, you see, that approval we have already taken, it is just for the sake of approval. At times, they need, we can support. That's it.
Got it. Thank you, sir. Thanks a lot, and all the best.
Thank you. The next question is from the line of Kunal from Centrum Broking Limited. Please go ahead.
Thank you for the opportunity, sir. Congratulations on the good set of numbers. So just one question from my end. Just wanted some guidance on FY24 and 25 numbers for revenue and EBITDA margin.
24, 25.
Yeah.
This is a good opportunity for us to start working on FY24-25 numbers. So we are still working on that and probably will be ready by the next quarter call.
Okay, sure, sir. Thank you so much.
Thank you. The next question is from the line of Yash Dantewadia from Dante Equity. Please go ahead.
Hello. Yeah, I just have one question. Regarding the new technical plant in Dahej, what is the asset turnover that we can expect and by when?
You see, it is a little early to comment. Our R&D team is working very hard day and night. It depends on product mix. You see, it's a little early to answer this question.
So when can I get back to you with this question?
Probably in the financial year end after 6 months.
Okay, perfect. Thank you.
Thank you. The next question is from the line of Sagar Shah from Piper Serica. Please go ahead.
Thank you so much for the opportunity. First of all, sir, many congratulations for excellent set of numbers and great results by Dhanuka actually in such you can say weak environment actually. So my first question was related to that only, that in the month of July we saw robust rainfall. Again in August and September there was tepid rainfall, and again there are something like doubts regarding rainfall in southern India, especially in November and December, and where there is actually major market for spices, as you said in the introductory call. So basically, my view was, in spite of that, your product did very well actually. But My question is whether are we actually really confident of a good performance in H2 also, in spite of the Rabi reservoirs are not fully built also, and there could be some significant headwinds actually going ahead for at least for the entire industry. That is one thing. My second question was some sort of, you can say, data keeping that Decide constituted how much in absolute terms, what was the turnover Decide actually out of the total revenue? And the last question was basically almost your new launches have contributed around 16% of total portfolio. You have already explained the kind of you can say the new products performance that you are actually expecting in H2 and going ahead also. But I wanted some part that can we see the new products revenue crossing 20% also going ahead in FY25 and 26, and overall view on even on the biopesticide products. So these are my three questions, sir.
Thank you for that question, and I absolutely appreciate the prelude to your question in terms of the headwinds. And we are absolutely facing a difficult situation when it comes to El Nino, the predicament of poor rainfall in the most important month of August, and the low reservoir levels in various parts of the country. Now, these absolutely are the challenges faced by us at Dhanuka, by entire agri-input industry, but worst of all by the Indian farmer.
Yes.
I can only say that we at Dhanuka are doing whatever little we can do to make an impact to the farmers who have some opportunity to get the best value out of their crop, to get the best value out of their land. So our efforts, our contribution on that front translates into our financial results, which we are discussing here. But what we are not discussing here is the plight of the farmer, and nothing more to add over there too. Talking about our products opportunity, well, the opportunities are actually becoming better because farmer will be going for crops like maize, which will be relatively consuming lesser water, where our Implode and Mesotrax, which are powerful herbicides, will find opportunity in the Rabi. The water levels in the paddy fields where farmer is growing paddy will be challenged due to lack of rainfall, so BPH attacks will be more intense. And when the BPH attack will be more intense, then this will give opportunity for Defend, which is our BPH product from Corteva. Low moisture conditions and dry situations in the fields will give rise to mites and sucking pest challenges in chili and almost all horticulture crops, which is having high price and high value today. Onion prices, tomato prices, chili prices are all-time high again. So farmer will need good solutions, effective solutions, reliable solutions to control those menace. And then he will fall back on Dhanuka's good quality products. So that is how I think so we are absolutely confident of standing our ground in H2 also and year after year.
Okay. Sure, sir. So my just this one that data keeping question that Decide constituted in absolute terms was how much to our total top line in this quarter, sir? Or maybe in H1?
I really thought you will forget that one, but we do not share specific numbers on the products in the call.
Okay.
Yeah,
sure,
maybe in a one-on-one meeting. Yeah, thanks.
Okay, so basically, is this fair to assume? My just last question is that in FY25 and 26, at least we will see if we get a decent rainfall. Our new products introduction revenue would cross about 20%.
Oh yes, new products NPI index will certainly be much higher. We are absolutely sure of the NPI index being much higher in H2 as well as in FY25.
Okay. Sure, sir. Thank you so much. All the best, sir.
Thank you.
Thank you. The next question is from the line of Ajay Surya from Niveshaay. Please go ahead.
Congratulations on a good set of numbers. So my question is, if I look at the overall share from innovative products, it has been constantly increasing, and even for this H1, it has been around 16%. So, sir, what share of overall revenue do we foresee from these innovative products in coming 2-3 years, and what sort of margin differential do we have apart from the other non-innovative products in these innovative products?
You see, ITI index, we are expecting in the year-end similar improvement. In the first half, the improvement over previous year is around 2%, 200 basis points. We are expecting by the year-end similar percentage. In terms of margin, yes, definitely margin is better as compared to the overall margin in ITI products. Absolutely.
And sir, these innovative products are also on the herbicide side, or would that be insecticides?
I could not get your question.
Sir, these innovative products which we have, sir, are those more inclined towards herbicides, or are those like fungicides, or what are those?
This ITI index is the current year plus previous 3 years. So it is combination of all herbicide, insecticide and fungicide. All 3 type categories are appearing.
And this year we have introduced 3 herbicides. Mesotrex, Implode and Tizom are 3 herbicides. Defend and Simicia are 2 insecticides.
Okay. So my next question is on what capacity do we currently have on the formulation side, and at what capacity utilization are we operating?
See, formulation is a relatively simpler operation, and we do not have a capacity constraint. We have 3 units, one at Sanand, one at Udhampur, and one at Keshwana. All 3 units are doing really good in terms of the capacity utilization, not being too high. And we can almost double the revenue from our existing capacities.
Got it, sir. Thank you. That's it from my side.
Thank you. The next question is from the line of Viraj from SIMPL. Please go ahead.
Yeah, I just have one query. Once the receivables kind of normalizes at the end of the year, the cash on the balance sheet would be like significantly higher. So any thoughts in terms of deployment of this?
You see, we are already in this process. We are spending everything out. You see, all investment out of the internal accruals, and we have already made 3 buybacks, and we are paying handsome dividend. So now the cash is being maintained at a similar level the last few years. It's not increasing too significant. The moment it crosses a certain level, so some investment are happening, and the buyback is happening, and dividend paying is happening.
Okay, that's all from my side. Thank you.
Thank you. The next question is from the line of Manish Mahawar from Antique Stock Broking. Please go ahead.
Yes, sir. Just in terms of your product, right, decide which chemistry it has replaced actually in terms of overall market perspective.
Okay, so sucking pest is a huge segment. This product would have replaced the neonicotinoid chemistry in the market, like imidacloprid, acetamiprid, clothianidin. So these are some of the thiamethoxam, some of the examples of the sucking pest products being used in chili, cotton, tomato, brinjal, okra. So
understood. And same in terms of a defend, right? Which is more of a BPH, right, as a segment. So it is same. Which are the chemistry? Because BPH is very, very old, I think, paste, which newer chemistry is coming, which are replacing the older one, right? So which are the chemistry it is replacing, and do we have a existing product which are supplying for BPH?
Well, this one is not replacing any BPH. So Decide is not a BPH product.
No, Defend, sorry. Defend I'm talking about.
Yeah, Defend is the BPH product. And Defend is doing really well, and it is probably going to replace a large part of pymetrozine consumption.
Okay. So basically, earlier I think so it's a more bupropion, then it came to dandiferin, it came to pymetrozine, and now it's came to this one, right? Defend, you are saying. This will replace that.
Yes.
Okay, understood. And last one again, in terms of your product Tizom, which is a combination of, I think, so your old product, which is a Sempra, and I think your Barrier is a product, right? It's a combination of these two, right? So it is replacing
a combination product, yes.
These two products, right, for our portfolio. So it is a more effective in terms of combination, or it's just filling the gaps in the portfolio?
So when we try to bring in a combination, the idea is to identify the segments of farmers which need that combination. So there is a particular set of farmers, which needs that combination in terms of the differentiated weed profile in the field. So our scientists, our field R&D team, they continuously interact with the farmer, they survey the fields, and they try to identify the gaps farmer is facing. And we try to offer solutions to the farmer, one, to meet those gaps, two, meet those gaps effectively, and three, have a product which is very efficient. So as Tizom, we are trying to offer sugarcane farmers a very efficient solution of total weed control in his field. And the results are absolutely amazing.
Okay, but it's the same paste, right? Attack for the same paste what the Sempra we launched about, right?
So yes, it does control weeds which are controlled by Sempra because it's a combination of Sempra, but it controls many other weeds which were not controlled by Sempra.
Okay, understood. Okay, sure, that's it from my side. Thanks.
Thank you. The next question is from the line of Resham Jain from DSP Asset Managers. Please go ahead.
Yeah, thanks for taking my question again. So, two questions. So, first one is, at the H plant, you earlier mentioned that you have two phases of in which you will be doing capex. So, second phase of capex should start next year, or maybe in 26. And will it be you will wait for innovator kind of CDMO projects to come in, or you will start with your own technical kind of own products in phase two?
We have several products in our development pipeline. As and when they reach the maturity stage, we will be introducing them. In the current plant, we have capacity to add another 2-3 products. But we will not wait for collaboration with international partners or contract manufacturing to go for fresh capex. As more and more products come from our R&D, we will be doing fresh capex, probably next FY also, but it will all depend on how quickly the R&D is able to get products developed.
Okay, understood. And the second question is, we have investment in a drone company. So if you can just give some update on the same and any further stake increase over there, any possibility, any update over there would be helpful.
Yeah, so drones are being received really well by the farmer. The drone company that we are working with had earlier launched a version. Original version was the first one to be approved by DGCA. That version required a 4-wheeler to carry it around in a big heavy box. Now the drone company IoTech has come up with a lighter version which required a box on motorcycle to be carried along, and they have further upgraded the drone into a motorcycle carried backpack version to move around. So which has made it really handy to reach the interior villages and up to the field of the farmer as compared to a 4-wheeler which was required a year ago. So the company is working on a strong supply chain and offering upgraded solutions and versions to the farmer. We are working very closely with the farmer side and doing various projects and experiments in different crops and with different products.
I think so drones is a really has a very promising future.
Okay. Any numbers over there?
I think this will not be an appropriate space to talk about their numbers. That's an independent company. They'll be doing their numbers on their own.
What stake you will be having after maybe second or third round, or whatever stake you have currently is the final stake?
Well, we have what we have right now. That's stable, and as of now, no decisions on the next rounds of stake change.
Okay, understood. Thank you. All the best.
Thank you. Thank you so much.
Thank you. Ladies and gentlemen, we take that as the last question, and I would now like to hand the conference over to the management for closing comments.
Friends, in the end, I would like to thank all the participants for joining us today. We are looking forward to a great quarter. Dhanuka is committing to transform India through agriculture. Our purpose is to strengthen the nation by providing sustainable agricultural solutions and bring honor, pride, and abundance for the farmer and farming community. Thank you very much. Goodbye.
On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.